Right friends, welcome back to Banking Awareness. This is lecture number 16 and in this class we are going to discuss differentiation between certain terminology. Nostro account and Austro account, soft loan and hard loan, then bullet loan and term loan, then foreign portfolio investments and foreign direct investment, trustee and legal hire, the difference between creditor and debtor, insurer and insured, the difference between phishing and skimming. These words we are going to discuss in this module number 16. Now let us look at the first differentiation between Nostro account and Austro account. These words Nostro and Austro are basically Latin words. This Nostro means our and Austro means your. So, if someone says Nostro account, it indicates our account, and if someone says Austro account, it indicates your account. So, this is basically used in foreign exchange transactions between various countries. And State Bank of India, let us assume State Bank of India in Delhi has got an account with HSBC Bank in London. State Bank of India in Delhi has got one account with the HSBC Bank in London so as to take care of its international transactions. State Bank of India may have customers across the world, and similarly it may have customers even in London also. So as to take care of the foreign account transactions of State Bank of India customers in London, State Bank of India will open an account with HSBC Bank in London. So, from State Bank of India's perspective, it is our account with you. If State Bank of India has to say about its account in HSBC London, State Bank of India will say it is our account with you. That is the Nostro account from State Bank of India's perspective, because Nostro means our. So, from State Bank of India's perspective, it is our account with you. That means it is the Nostro account from State Bank of India's perspective. If you look at HSBC's perspective, it is your account with us. That means it is Austro account. Austro account is, it is your account with us. So, from the perspective of this HSBC London, the account of State Bank of India becomes Austro account. So, please remember this terminology, Austro and Nostro. Look into the next one, soft loan and hard loan. What is meant by soft loan? What is meant by hard loan? Quite frequently you come across these terms. Soft loans are the loans, sometimes known as concessional loans also. These are normally given by governments or because of interest subvention. They are given by banks, and sometimes they are given by multilateral lending institutions like IDA. You may ask, what is IDA? IDA is International Development Association. This is the wing of World Bank, and ADB, Asian Development Bank. Sometimes these type of multilateral institutions and governments give soft loans considering the socio-economic aspects. And soft loans, the features of soft loans are the interest rates are less than the market rates. If the market interest rate is 10%, and soft loan may be given at 6% or 7% or maybe at 3%. Then second important point is long repayment periods, and interest holiday will be there for some period. They need not pay interest, and some periods there may be moratorium on the servicing of the loan. That means altogether for some period they need not service the loan. These are the features of a soft loan. Soft loan indicates with easier terms when loans are given. Sometimes, looking at the socio-economic aspects, governments may resort to soft loan, and multilateral institutions like World Bank institutions or Asian Development Bank may give soft loans. Hard loans? Hard loans is basically with the stringent conditions, and they may have more interest rate also. More than the interest rate, lot of stringent conditions are attached with it, and when the risk element is more, normally banks or financial institutions charge more interest. That's why they are termed as hard loans. Hard loans carry stringent conditions, more interest rates, and sometimes overseas loans in hard currencies. You may ask, what is hard currency? Hard currencies are the currencies which are stable in nature, like United States dollar, Japanese yen, British pound, like that. These are the hard currencies. When loans are taken in hard currencies, they are sometimes known as hard loans, right? Soft loan is more frequently heard in comparison to hard loan, right? Look into the next one, bullet loan and term loan. What is the difference between bullet loan and term loan? Bullet loans are to be paid at once. If you look at crop loan, all of you are well aware, each and every farmer up to 3 lakhs value is eligible to get crop loan at 7% interest rate. Here the interest subvention is given by the government of India, and here when the crop loan is given to the farmer, he is supposed to pay back at once after the harvesting of the crop. After he gets the produce of the crop, then he is supposed to pay back to the bank at once, both the principal and interest put together. That is bullet loan. Similarly, gold loan, you are taking by pledging gold. You are required to pay at once both interest and principal. So, the examples of bullet loans are gold loans, crop loans, where you are required to pay back at once. And see the difference with term loans. Term loans are the loans which are required to be serviced at agreed period. When you take personal loan, when you take vehicle loan, when you take corporate loan, when you take house loan, you are required to pay every month. Principal and interest put together, what is popularly known as EMI. So, every month you are required to service the loan, which is known as EMI. So, this is a term loan. I think you are clear about bullet loans and term loans. Look at the foreign portfolio investments. Foreign portfolio investments, or you can say foreign portfolio investors, or the foreign investors registered with the Securities and Exchange Board of India in India, and they are investing in Indian stock markets. At any time they want, they can invest in Indian stock markets subject to the limits, and at any time they want, they can take away that money. So, foreign portfolio investments are the investments invested by the foreign portfolio investors in Indian stock market subject to the limit. At any time they want, they can invest, and at any time they want, they can take out. They normally invest for short-term gains. If the stock market is rising, if the interest rates are high, they will come and invest here. And if some other country is paying more interest, then they will take it out and they will go to some other country. So, these foreign portfolio investments are volatile in nature. That means they are unstable, causes artificial bubbles. When lot of money is coming from foreign land, our stock market will rise artificially. It is not a real rise, it is asset bubble. And when the money is withdrawn by foreign portfolio investors, then stock market may suddenly crash. That's why the foreign portfolio investment sometimes cause misery to the emerging economies like India. Please do not forget, foreign portfolio investment is volatile in nature. That means it is unstable. It causes asset bubbles. Sometimes emerging economies will be affected. If you look at foreign direct investment is the investment coming from the foreign land for establishment of some company here. They will establish their subsidiary here. When Coca-Cola or PepsiCo companies are established here by the American parent company, PepsiCo and Coca-Cola are both based in America. They are establishing their investments. They are establishing their companies here, PepsiCo or Coca-Cola. Similarly, Nestle, Switzerland-based firm, they will invest in India for establishing their base in the country. This Hyundai Motors, this is Korea-based. They will invest here for establishing a car company. So this is foreign direct investment. They are allowed up to certain limit. Certain limits are prescribed by the government from time to time. If it is telecom sector, 100% is allowed. Vodafone is one example. If it is banking, 74% is allowed. If it is defense, 49% is allowed. If it is insurance, 49% is allowed. Like that, the limits are given by government from time to time. Subject to the limits, foreign companies can invest in India for establishing their manufacturing base. That's why it is more stable. It aids to the growth of the economy. It creates employment and it is good as a whole for the country's economy. So this is the major difference between foreign portfolio investment and foreign direct investment. Look at the next one, trustee. Trustee is caretaker, not the owner. Look at this figure, some building is there. That building owner is going to America for 1 year. Then he will give the trusteeship to his known person A. That means A will manage the affairs of that building. He will hold that in the capacity of trustee. He will be the caretaker of that building. He will not be the real owner of that. Similarly, in the banking transactions, nominee is to be nominated for each and every bank account. Nominee will receive the money in the capacity of trustee only if the customer dies. If the customer dies, bank will discharge the liabilities of the customer to the trustee, to the nominee, and nominee will receive in the capacity of trustee only. Right? Trustee is caretaker, not the real owner. But look at the legal heir. Legal heir is as per the law, he will be the owner of that property if the ancestor dies. If ancestor X dies, as per the law of the land, and the law of the land may be different across the communities. Muslims may have one law, Hindus may have another law. As per the law of the land, the property of the deceased person will be inherited, and this is the legal heir. So trustee is not the owner, he is the caretaker, but the legal heir is the real owner of that property. Right? Look into the next one, creditor and debtor. Creditor, debtor. If I give money to you, you are my friend. You borrowed 100 rupees from me. I am the creditor. You are the debtor. And you are my friend. I borrowed 1000 rupees from you. You are the creditor. I am the debtor. Debtor is the person who owes money to the other person, who has liabilities. Right? So, in the banking parlance, let us take case 1. When customer X deposited money in SBI, Customer X is the creditor, SBI is the debtor. And when SBI gave loan to customer Y, SBI is the creditor, customer Y is the debtor. I hope it is clear to you from this illustration. Look at insurer and insured. You might have taken life insurance policy from Life Insurance Corporation of India. That means Life Insurance Corporation of India will pay if something happens to you. What is meant by insurance? If something happens to you, Life Insurance Corporation of India will pay the money. For that, you will pay premium as per the agreed terms and conditions. And in this case, Life Insurance Corporation of India is the insurer and the customer is the insured. For the value of the policy, how much premium is to be paid, these things will be decided by the underwriters. Underwriters are the persons who look into what premium should be there for each value of the policy. Right? So, LIC is the insurer, customer is the insured. And look at the last one, skimming and phishing. What is the difference between skimming and phishing? Skimming is illegally copying your information from your ATM card or credit card, illegally copying your information by inserting a skimmer. Wherever you are inserting the ATM card or wherever you are swapping the card in POS terminals, there may be an instrument, there may be an hidden instrument which is known as a skimmer. The purpose of that skimmer is to copy the information of ATM card or your credit card when your credit card or ATM card are with the magnetic stripe type, and it illegally copies the information. And when you are using ATM, then there may be hidden cameras to look at the PIN number also. That means it is a fraudulent activity. So, illegally copying the information is skimming. What is the phishing? Phishing is nothing but stealing your important information like password, username for your internet banking accounts. When someone is stealing your password, username, you may get sometimes mails. You have won $1 billion. You have won $1 million euros in the lottery. Please click this link. Please give your password. Please send your bank account number. Like that, you will get phishing mails. Please don't respond to phishing mails. And when you are visiting ATM, please look for any hidden cameras or skimmers. So, this is skimming and phishing. I hope it is clear to you. Right? Friends, we have learned many words in this lecture, and please do join for 17th module. We are going to discuss some more words in 17th module. Have a nice day. Thank you.